Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking out the tech sector, we've got XLK hitting a higher high, a new all-time high, keeping the bulls in full control. We have our higher low on the daily now established at the low of this consolidation, 58.35. It is an indecision candlestick. It could lead to some profit taking. We did see the tech sector with weakness today before the bulls did buy the dip at the end of the day. But with the FOMC Wednesday, we have to be cautious of further profit taking, and a loss of this higher low pattern will let us know that we're likely to test this daily middle Bollinger Band. So as of right now, the bulls are still holding on. This indecision candlestick could very well see some further downside. As I said in my SPY video, there's no better scenario for a scenario for the bulls to disregard a bearish reversal candlestick than when you're in blue sky breakout. It's very easy to do for those bulls. And we did it plenty of times here on the way up back in July. So we'll see how it plays out tomorrow. The low of today will be a key support, 58.57. If that breaks, 58.35 is on deck as the next support. Resistance is 59.01. And then we'll look at 59.50 psychological, as there is not much resistance in blue sky breakout. Weekly time frame, upper Bollinger Band has a bit of space. That's at the 59.24 level. So we could still see some further upside before we encounter that resistance. Apple is building a base of support, but we're not seeing any bull follow through. This base is down at 158 with 4 lows right at that level. The middle Bollinger Band is resistance, just over 160, and we have to be cautious here because this is still weakness. We have to still give the favor to the bears because the bulls have not proven anything since we started this sell-off and the bear reaction to the conference they had. So lower high and lower low still in play. Resistance is 160.97, the high of this tight range, and with a close fairly close to the low of the day and all the bear volume that we've seen over the past week, the bears have the upper hand. The weekly time frame is healthy consolidation, however. There's no red flags here for the bulls in the long term. The weekly middle Bollinger Band support continues to catch up. It is, you could even make the argument this is still a bull flag after this multiple month flagpole and then a healthy consolidation period before continuation. That's what the bulls are looking for. But as of right now, the daily chart certainly still favors bear momentum going forward. Facebook, a very key week break. So Facebook lost the middle Bollinger Band, and support was 169.55, and we broke that level as well. So this is a bit of a red flag in the short term. We didn't get that all-time high after being very close, and now we are losing a lot of momentum. So the 50-day moving average support is next. That's going to be right around 168 coming up, and the key support is 165 even. Bulls must hold this level. If that is lost, we then have a lower high and a lower low. The weekly time frame, we have our all-time high, the low of consolidation, now a lower high at 174, and the bulls are trying to cling on to these exponential supports and ideally form a higher low compared to 165 to see this equilibrium pattern on the weekly time frame continue to tighten up. Bearish MACD cross is close to following through. So there are some signals on the tech sector overall and some of these leaders, Apple and Facebook, which have been so strong in the past, that are saying we need to be a bit cautious. The daily chart is seeing a shift in momentum, and now the question is going to be how does that translate to these weekly charts, which as of right now is not a big deal, but the daily chart does have us being prepared for the bears to take over a little bit more significantly. We'll see how the FOMC goes Wednesday and has an effect on this sector. So thanks for watching. We'll check back in tomorrow. Have a great night.